Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Friday, December 28th, 2007. Well, today we're going to go over a few charts and a few different stocks, and I just want to look at a few things today because overall today was almost like a perfect choreographed dance. And when we look at the charts, you're going to really see here how what we talked about yesterday almost to a T came to fruition today. And it was just a very slow day, light volume day, just like we talked about as well. Let's get right into the charts here. And I'm going to look at the NASDAQ first. On the NASDAQ, we're going to start with the daily chart. And yesterday we had that big move down on the assassination and a couple economic data reports, or who knows what it was. But long story short, we were overbought. And we went over this yesterday, how we were overbought from this run right here. And look at the angle, and we talked about the angle yesterday, how steep it was, and how you knew there had to be a little pullback in that little steep move up. So at least you could kind of say, okay, well, we pulled back a little bit, and now we could either go up or down, or just stay sideways. And we talked basically about how we thought the market would stay sideways for the most part, and that's almost exactly what happened today. We also talked about yesterday how we had closed below the 50 moving average, and how most likely, even though it was probably going to be a flat day, we needed to at least touch this 20 moving average. And if you look at the chart right here, that's exactly what we did. The NASDAQ to a T touched that 20 moving average. Overall, the NASDAQ basically ended the day flat. In fact, the NASDAQ closed down about 2 points, the S&P up 2 points, and the Dow up 6 points. So just almost like clockwork, almost like a beautiful choreographed dance. We were able to talk about how the market probably would end flat today. Monday probably will be around the same thing. I know for a fact that I will be very cautious in day trading on Monday because of that factor. Whenever you have lighter volume, you have to be careful because moves in stocks that you think will develop won't necessarily develop because there's no volume behind it. And that's one of the key things, if I can impress on you today, those of you that are traders out there, volume is very key. Without volume, a stock will not move. If a stock spikes up 10 cents on a $2 stock on 5,000 shares or 3,000 shares and the normal trading volume is a million, you have to take that with a grain of salt. That's a light volume move, and it will not usually materialize into anything more, and you should not be chasing a stock that happens. Now, if a stock usually trades 10,000 shares a day and on 5,000 shares it moves up a dime, then that might be significant, and you might be starting to see a move in a stock. So volume is a key factor in anything. And right now in the market, when you have holidays like this, like New Year's and Christmas and all this other stuff going on, most traders are on vacation, most traders are not trading, and in that case the volume is exceptionally light, and that's what we've seen. So again, we saw that drastic move up, as we had talked about in previous videos, right around here. I remember, right actually on this day right here where we spiked down, we said, oh, we don't think this market's going to break down. There's just going into the holidays, you're going to have that late bounce, even though people were discounting, saying, okay, maybe we won't have a Santa Claus rally. And as I said in previous videos, that's exactly what you want to hear. When you're coming up to Christmas and everyone's expecting a rally and you start to sell off like this, and you come down here and then everyone starts to say, oh, well, maybe this won't happen, that's exactly when you need to step up. I'm a contrarian player to a T, folks. It is one of the best indicators you will have. You might think stochastics are good, MACD, RSI, money flow, who cares what it is? I'm telling you right now, a contrarian is at least as good, if not better, than all those indicators right there. It just somehow works out. Whenever you have the media or everyone else pushing one way, most likely the market will go the opposite way, and it almost always happens. Now, one thing we do have to keep in mind is that we have a couple areas on this chart to watch for next week, and I'm going to bring out my trend tool so we can kind of analyze that and take a look at it. Number one, this point right here. Alright, there we go. Line that up perfectly there. We have a little double top in this market here. Now, number two, the 20 moving average was hit, which is near-term support. Alright, number three, we have the 50 moving average right here. So these are going to be key levels to watch for. Now, again, I don't really, unless there's specific news on Monday, and Monday again is New Year's Eve, so volume is going to be extremely light. You have to, with light volume, and we've said this a zillion times on the videos, you got to favor slightly to the upside for a light volume day. It's just in general, that's the way it happens. Now, the one thing I will point out is that maybe late in the day we see a few people unwinding positions, meaning selling positions, as they don't want to hold it over that holiday, just in the fear of something going wrong or something happening, and hopefully that will not happen. But I could see that as a possible, maybe late in the day, maybe a few people unwind their positions to be a little more on the cautious side. I know personally, I probably will not hold more than one or two small positions over that holiday, over New Year's, just on the off chance. All right. So I think that's just common sense. You just want to be a little more careful. I mean, it is our hard-earned money at work here. There's no reason to be reckless. My guess is that there's nothing we can't buy Monday that we can't buy the following day just as well within the same general price range. So that's how I'm at least doing it. And obviously, I always say when I talk here, this is just for entertainment purposes. Never take anything what I say in a serious manner. Always consult your financial advisor. Okay, so let's look at the intraday chart quickly here on the NASDAQ. You know what? Let's look at the ES chart because it's a little more dramatic and we can see it moves a little better. Overall today, normal day. We saw the push up here early on, and there was a nice little push, as you can see right here, above 1500, but it did not last long. Starting right around, let's see, 7:30 it looks like, right here. We had that push up and then basically a move back lower, and the move just continued. And we got a major spike down around 10:45 to 10:50 right here, and right there you saw that big move down, sideways move. And again, I love these patterns because whenever you see a pattern like this after a big move down, it's usually setting up for another drop. What I like to call this is almost a bear flag, or in spirit of a bear flag. It's not that a bear flag necessarily to a T, but it still has that same kind of mentality. And you can see here it's like an upside down flag. Whenever you have that after a big move, I would say it's a good percentage, and now it's not 100%. Nothing in the market is ever 100%, but it's a good percentage that you're going to have another move down. At least my main key right here is you usually have a move down again to a double bottom, possibly lower, and in this case we got a move down lower. Now here's where we got the double bottom. You got a small move up, a retest to the lows right there, or in fact it causes a little bit of a W pattern in the market, and then you got the move up and a small move down and a sideways trend the rest of the day. So overall, very light volume, folks. 792,000 contracts traded today on the ES, and we are looking at the ES H8 contract, which is the March 08 contract, and that's the contract we are in now for the S&P futures. Okay, so keep that in mind. That's what happened intraday, and other than that, with light volume, that's it's basically turned out to be a slightly down day for the ES as it ended down 4.25 points. Now, we did have a couple interesting things happen today. Number one, I want to show Baidu. Baidu actually had a down day today, down 10 points. Now, Baidu, B-I-D-U, has had an amazing run back up ever since it sold off back down to this level. And look at that little bottom it made right there. Beautiful little bottom after coming off the high here. It is making its way back up, and it's going to be interesting here to see. We didn't make a double top yet, so it may or may not happen. To be honest with you folks, I kind of feel like everyone's expecting a fall in early January, and I almost expect one more push up in early January, and then we do have a fall. But what I want to see almost is nothing dramatic, not a major push up, but a couple or 3 or 4 days of a rally where we go up a decent amount each day. In that case, what it's going to do, or I'm hoping will happen, is you start to turn a lot of the bears back into bulls. You have people start talking about maybe everything's okay, and then at that point, I will turn bearish again, as I do think we need to retest the lows here again in the market. All right, so I'm just going to go back to the SPY chart here and talk a little bit about the longer-term view here. What I am watching here, and first of all, it's not a good head and shoulders here. So a lot of you guys might think this is a head and shoulders, where you have the head here and the shoulder. But with this angle, with this point lower here than this, that's not a good head and shoulders. So we won't look for a breakdown based on that pattern. But what I do want to point out is you had this triple area where you had 3 moving averages, the 50, the 200, and the 20 moving average. And we are below that again, so it does bear watching. Now, even though I think we maybe have a fake out push up, and it's, again, I'm not calling for any type of major push up, so please be aware of that. I'm just saying a small moves, maybe 2 or 3 or 4 consecutive days where people start to say, okay, well maybe we are going higher, and at that point I think that's when you reverse the position. But again, that's just speculation on my part, and again, always consult that financial advisor you all have, I'm sure. In any case, folks, my point being is this, is that at some point in mid-January, or maybe earlier or maybe later, I don't know, it might even hold off till late January, I do think we have to retest these lows here. There's a lot of issues out there that aren't going away, from the credit issues to subprime, and I do believe subprime is going to start to spread to prime, And we are seeing a lot more issues with credit cards and people not being able to pay off their credit cards. So keep in mind, when it affects one sector, it always spreads to other sectors. That's just the way it happens, all right, folks? So just be aware of that, please, and understand that this might not be over just quite yet. So be aware of that. Also, what I want to draw on here, and I'm seeing this on the SPY just as we're talking, is look at this little trend line. All right, this trend line is a very interesting trend line. Now you have one hit here, 2 here, 3 here. Now, I usually like to see 4 hits of that trend line before I think it's a breakdown. So, again, this might be telling me that we have a sideways move before we break down, but I would look for a close below that trend line on your SPY, and those of you that want to, you might even want to redraw that line to really match up to the lows here, to be sure that it's a breakdown and we're going back to the lows. So, in any case, we should watch for that, and I'm going to draw that in one more time here to just kind of get into this point here. Alright, we can watch this trend line even more accurately. So it might be that we test this line here, then have a small bounce up, and then the next move down breaks down. But ultimately, I have to believe we are going to this low and ultimately lower, I think.